Monday, November 13th, 2023, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at whether Yellen and the U.S. Treasury are allowing the Chinese to acquire cheap gold in exchange for some support in the U.S. Treasury market. And of course, this is purely speculative, but there are some signs that this is happening. And I'm going to use an article from Zero Hedge. And also, I'm going to mention Rafi Faber because he made an interesting video about U.S. Treasury issuance. Before I do, though, I'd like to thank all of the new subscribers. We've had a pickup in subscribers. But if you do enjoy watching my videos and you haven't subscribed yet, make sure you do. We're trying to reach 100,000, hopefully by the end of the year. We're almost at 94,000, I think. And it would be a good thing. Yeah, so make sure you hit that little subscribe button. Also, make sure you like the videos if you enjoy them, and make sure you share them. So there's been a lot of talk about U.S. Treasury auctions. There's been talk about ransomware as it pertains to ICBC, which is the biggest bank in China, and it's also the only Chinese bank that operates as a securities dealer in the United States. And we've noted as well that in the last 2 months or so, the physical premium, physical gold premium in Shanghai has been quite large compared to the London and New York prices of gold, like COMEX and LBMA, the paper price, if you want to call it. And I have to thank Francis Hunt, the market sniper, who was actually on my live stream last night. And if you haven't watched that live stream, it was a really good one, I think. And I don't like to brag about things, but we had Francis, we had Clive, we had Andre from Brazil, and we had Rafi Faber. I think if you haven't watched it, you'll enjoy that. But Francis noted that Zero Hedge put out an article from VBL about this topic of China taking delivery of US-based gold last month. I'm not going to go through the whole thing, but suffice it to say there seems to be a lot of move from the gold ETF to China. So I recommend you read that, and it makes a lot of sense. Why? Well, because the Chinese government, they're encouraging the public there to buy gold. They have been doing that for years. The People's Bank of China, they've bought a lot of gold this year. I think officially 180 tons. It's probably even more. And why would Yellen and the Treasury allow U.S. institutions to deliver all this gold to China, to allow all this gold to flow from west to east? Well, because unfortunately, the people running our finances, and it's not just in the U.S., but here in the U.K. and also in the EU, I would say, they have no idea how important gold is, and they allow this to happen. And the banks that do this, they do the arbitrage, and they make fiat, they make money, so to speak. So they're very short-term thinkers. They don't think of the long term of how important gold is. Well, you only need go back to Gordon Brown in the late 90s. He sold half of the UK's gold, and he pre-announced it. He was a complete disaster, of course. And almost bankrupted the country. By the time the banks collapsed here, he'd become prime minister, of course. But before that, he was the finance minister or the chancellor who wrecked really this country. And I'm not having a go just at labor, because the current lot here are wrecking the country as well. So And I mentioned that Yellen is allowing this to happen, yet because Yellen and the Treasury and the Fed, they regulate these banks. They could tell JP Morgan and other bullion banks, stop doing that. But why do I think they're allowing this to happen? Well, it could be, as I said, incompetence and no idea of how important gold is. It could be also related to the big shift, and I've spoken about that many times. And it was James Wolfenson, the former head of the World Bank, who spoke about this to the Stanford School of Business back in 2010, that the West needed to allow a balance of a shift, of wealth to go from the first world, the Western world, if you will, to the developing world, that the world needed to be more balanced, or else there would be a lot of trouble. Not that there isn't any trouble right now, but he spoke about this big shift. Basically, it's a redistribution of wealth from west to east, and I think this is part of it. And what about the bond auctions? Why would China want to help support U.S. Treasuries? Well, I think it's a little bit of give and take. The Americans are saying, you can have this gold, but you got to help us. Isn't it interesting that Yellen, she's been to China this year to visit the Chinese officials, and I see here that she's going again. U.S. Treasury's Yellen says we'll return to China in 2024. And it's interesting that's always her going there with a begging bowl, right? If the Chinese were not in a position of power, they would be going to Washington, D.C. So it says here, U.S. Treasury Secretary Yellen said she looks forward to a return trip to China next year to further deepen communications between the world's two largest economies, and part of a regular cadence of meetings. That makes a lot of sense to me. As I said, Rafi Faber, and I'll put his video up in the cards, did a very good video this weekend, and he went through all the numbers from SIFMA, and he worked out that the U.S. Treasury needs to issue $5 trillion of debt in 2024 just to pay off maturing debt, and then you add $2 trillion deficit that they're going to run, and it could be even more. We don't know if we go into recession. That's $7 trillion, and it equates to 538 billion issuance each week on average. So, and we know that the Chinese have been liquidating some of their treasuries, and if you have this amount of treasuries being sold every week, you want to make sure that things go smoothly, and I still think yields are going to have to rise in order for the market to absorb that amount of treasuries. And so that could be very possible that it's happening. Support our treasury market, and we'll keep gold really cheap so you can buy it. We know you like your gold. We don't care so much about it, or maybe they do, but they want the East rebalanced. So that's what I see. And quickly, before we look at the markets, I want to talk a little bit about how Treasury auctions operate, because I see a lot of people out there commenting that there was a failed auction last week, the 30-year bond auction, and it wasn't failed. It was a bad auction, but it wasn't failed. And I know this because at the beginning of my career, I did work in the Treasury market as a broker for cash treasuries, not the futures. And even though I wasn't my clients didn't directly trade before auctions in the WIs. And what is a WI? Well, it's a when issued. So you can trade these bonds that are going to be issued, let's say a 10-year is going to be issued next week, you can start trading it today as a when issued, and it trades in yields, not in price. So if just before the auction results come out, and I think they come out around 2 p.m. New York time, if the when issued, let's say for the 30-year was at 4.6, and I'm just making this up, it was a different number I think last week, but let's say the when issued is 4.6, and then the auction results come out, and you find that the highest bid was 4.8. That's a huge tail, as they call it, 20 basis points, which indicates that probably the primary dealers that got lumbered with those treasuries, they went out and sold it right away because there's no demand for it. Their clients didn't want it. So that's why this auction was bad. There's a big tail. There's another thing that's really important that you need to know, and Zero Hedge talks about that. It's the bid to cover ratio. What does that mean? Well, let's say the Treasury sells 10 billion 30-year bonds. If there's 10 billion in demand in bids, that means the bid to cover ratio is 1, 10 versus 10. So last week's 30-year, I think the bid to cover was 2.2. So it was nowhere close to being a failed auction, because a failed auction would be one where there's not enough bids for the amount issued. So it would be less than 1. What happened here, and the markets watched this really closely, and Zero Hedge noted this, the bid to cover was 2.236. So there is still more bidding than issued, but it was the lowest since December 2021. So the lowest in almost 2 years. And they also talk about the internals. It says the internals were even worse. Foreign bidders or indirects tumbled from 65.1 to 60.1. I mean, the word tumbled is a little bit exaggerated. It dropped quite a bit, but I don't think it's a tumble. That as well as the lowest since November 2021. And they talk about how the direct bidders was down to only 15.2. And then the banks or the primary dealers, they were forced, according to them, to step up and take the balance, or a whopping 24.7%, double the recent 12.7% average. So yes, it was a bad auction. And there's talk that this ransomware didn't help because it stopped ICBC from putting their bids or whatever. And that could be so, but I'm not too sure that was the problem. And so that's what happened last week. Yes, it wasn't a good auction, but it didn't fail. But who's to say that we couldn't have a failed auction next year where there's not enough bids for the amount issued? Then the bid to cover would drop below 1. That would be catastrophic for the Treasury market. And we know that the Treasury market is at the base of not just the American financial system, but the whole world's financial system. You just have to look at John Exter's inverted pyramid. And I think back in the 90s, there was a failed auction in Germany, which is ironic because Germany, up until recently, was fiscally quite prudent. But yeah, I remember there's a Bund auction that was, the bid to cover was like 0.94 or something like that. So it's very rare, but it's possible, especially with all the issuance next year. And that's why I think Yellen is going to keep going a lot more regularly to China to make sure that the Chinese, play ball and at the same time say, look, you're going to get your gold. So there you go. With that, let's quickly look at the markets then. It's 8:29 a.m. London time. Spot gold is at 1938, so it's basically unchanged. Low overnight has been 33 and the high 1947. Silver is testing 22. It's down 25 cents or just over 1%. We're at 22 right now. The low's been 97, the high 36. Dow futures down 68. NASDAQ is down 50. The S&P futures is down 12. The currencies, sterling is up 0.1%, 122.40. The euro is unchanged, 106.92. The dollar is down slightly versus the yuan at 7.30. Aussie dollar, that's up 0.1% at 63.68. The dollar is unchanged versus the Canadian dollar, 138.07. And the Kiwi dollar is down slightly at 58.85. To the commodities, I'll start with natural gas, actually. U.S. nat gas is up almost 5% this morning. It's trading at 3.30. WTI crude is down over 1% at 76.25. Brent crude is trading just above 80 and it's down just over 1%. Platinum is up $4, trading around 850, and high-grade copper is up 1% at 365. We'll finish with the bond yields. So to the U.S. Treasury market, the 10-year yield is up 3 basis points at 466. The UK 2-year yield, that's still being kept under control, manipulated by the Bank of England. It's at 472. Makes no sense whatsoever, with CPI running almost at, 7%, I would say. The 30-year, that's up 7 basis points at 485. So with that, I'm going to wish you all a very good day and a very good start to the week. Take care. Bye.